Trading Market Technicals morning call video for Tuesday, October 15th. Well, we did get a continued follow-through from last week's price action. Dow Jones up 64, NASDAQ up 23, S&P up almost 7 points, and the Russell up just under 6 points. We did get a little bit of a low. We were down, as we all remember, good 12 to 13 handles in the pre-market. Sunday, when the S&P opened up down 17 handles, and that was again continued on resolution of what was going on this debt ceiling, which is going to come due on the 17th if they do not get their act together. However, optimism, and of course, remember, never short a dull market. Market actually bottomed right around 10:30, and then just kind of grinded higher all day. Very, very quiet because of the Columbus Day holiday, and there was really nothing going on. Just a bunch of the indexes kind of running up higher. A lot of the stocks that made its move higher in the morning. Just basically kind of meandered around in a range. So basically just the indexes were moving, which is fine. We do have some good price action. However, now, where do we go from here? Do we sell the news? I do expect a resolution coming out of Washington in the next day or so. I don't think that they would not resolve this issue, or at least kick the can down the road and extend it 6 months, 3 months, whatever the case may be, just to avoid any type of crisis here. I don't think they would be foolish enough to not to resolve this, or at least again kick that can down the road. But do we sell the news? I mean, and is there an impact on this? To me, I am, and again, this is not actionable. I'm not saying to get out and short the market, but I do expect some sort of repercussion out of this, and maybe again one more dip lower. We are into seasonal weakness, which we're ending right now. So this week should end the seasonal weakness and begin some seasonal strength going into, again, the holiday season, and of course that Santa Claus rally that everybody expects every year. But again, it doesn't have to happen, as you all know. So just kind of understand that and make sure we're well aware of what's happening. But in the interim, let's see. Let's take it day by day. We have rallied now just about 5% off the lows from last Wednesday. So it's interesting to see what's going to happen this week if we continue. Now we're up ever so slightly in the pre-market. The E-mini electronic session up about $1.50. So nothing really much, but at least it's holding their gains from yesterday. So we might get that knee-jerk reaction, move higher, and then sell off on a sell the news type, and then rally again. I do see higher prices, though. I don't see this market in a longer-term picture really faltering too much. Now, again, we could get that one more push lower, which would be great because we could buy into the market, especially if you're a swing trader or a longer-term investor looking to add positions to. But remember, guys, you got to use caution out there because anything could happen, especially with all this headline risk that's out there. All right, so let's go right into, I'm not going to show you too much. We had a long video yesterday, but I just wanted to show you the McClellan oscillator. It's still in neutral territory here, so plenty of room to really run up before we get overbought. And obviously oversold, that's the case. We're right in that neutral zone, so really not much to say. Let's take a look at the VIX. What I want to show you is this. Now, we've been showing you this picture for quite some time, and we're still stuck in it. We did get a black candle, so it could be a possible reversal candle, but we shall see what happens today. I'd love to see this get up to the zone again and then fail one more time, and that's when you can really possibly buy that market. But let me show you the weekly chart, and here's interesting. I showed this to you before. Here's a 200-week moving average, which capped this market pretty much most of 2011. We did get that spike up here, and then we sold off. Let's see, that was June, July, August. So yeah, pretty much most of the second half of 2011 we were above it, but we failed, and then all of 2012 and all of 2013. So this 200-week moving average is actually capping the VIX. So we've got up here again, and then last weekend we sold back down again. So I don't see why this 200-week will not do it again. So let's just see what happens here. Maybe we do get that spike into that 19-ish area, 20 area, and then fail again. And that would be, that spike up would be that push lower. Of course, as we all know, it's inversely correlated. And then the markets move higher again. So that's something that I wanted to show you guys. And as you can see here, we closed pretty much neutral again. in the markets as far as the CBOE is concerned. All right, so let's just quickly go into the charts. Again, not much really to talk about other than the fact that from Wednesday, we got the nice big doji, and then we got the push up. We got back above the fib cluster here, and now we're just kind of chugging along here. Spiders, as you know, with the S&P as the benchmark, and the Dow were the two weakest of the five that we follow. But again, now playing a little bit of catch-up, which is fine. And we'll see where this thing stops. If anything, we're going to get some resistance back up to this this downtrend line here from November 2012 low. So far, great push back up. We're above the 20, above the 50 again. So even if we were to roll for a couple days, as long as we don't really take out that 50 or at least that fib cluster and make that higher low from here. So as you see here, we have the June 24th low, higher low from here. Then we had that August low. Now we have the October 9th low. So we're making higher lows as we move up. So this is good. This is what you want to see. So if we do roll over again, we just don't want to really take out this October 9th low. So that's going to be a new pivotal low on this session on next coming days and weeks. So take a look at the IWMs here. As you can see, excellent shape. It's a good gauge of risk. People are not fearful of the markets. They're buying the Russell 2000. So this market is actually moving higher and actually took out the highs yesterday. So doing quite well. And this is exactly what you want to see one of our leaders. And look at the stochastics. We did that little, we sold off here and we unwounded that overbought reading. So we got plenty of room to run to the upside. And I do expect new highs here soon. Here is that fib cluster we talked about in the diamonds. Big move up. Back above the 20, back above the 50, held that 200 on from Wednesday, and boom, rallied right back up. Took a good 6, 7, 8, 9 days right out in 3 days. So this is exactly what you want to see. We're approaching the first 2012 low, as you can see here. So this is going to be the first area of resistance here. So let's just keep an eye on it. Let's see where we go. But again, guys, looking pretty healthy. Like I said, I would not be chasing this market short. If you're looking for a hedge, hedging this market on the next rollover would be actually the key. You don't want to be hedging down here. A lot of guys are saying, well, where can we hedge our portfolio? You'd want to hedge when put premiums are very low. And right now, that's exactly what's happening, right? The volatility is coming out of those premiums on the put side because market rallied so fierce the last 3 days, a good 5%. So wait to see where the market does, and if the market takes out these lows here, then that's when you could start looking for buying some protection when it's really cheap, not when it's expensive, and not when you're at the lows here. Okay, but anyway, transports are looking real good. Again, above the 20, above the 50, way above the 200, and above our 2012 lows, November 2012 lows, uptrend line. So looking really constructive here, guys. But again, news can disrupt the charts. Anything can happen. So please be careful out there. Okay, Goldman Sachs. Here's the only concern I have. One of the concerns, we have the semiconductors, NASDAQ, the semiconductors doing well, networking doing really well, banks lagging, right? We have IWMs doing well, transport's doing well, but we have some of these key sectors that really need to start catching along. And although Goldman did do well, as you can see, look what happened. Capped it right here at 160. I've been saying we need a break of 160, and then we can buy that next pullback. Just to be sure, and then the next test would be, of course, the highs here at 170. So Goldman acting well, not saying it isn't. However, we really need to get above 160, and then the next pullback, that would be the next buy-in. So I'm watching Goldman closely, and the XLF doing well, but lagging the other sectors. Okay, it is lagging, so we want the XLF and the bank sector to really start picking up some momentum here. We'll see what happens in the coming days. We did have JP Morgan, Wells Fargo report on Friday. They both caught bids on Friday, which is good, and actually holding up. So let's see what happens. Possibly we can get some continued follow-through on the XLF. That would entice me and encourage me a little bit more that we will see some good upside in the coming weeks. Here is Apple. Now, Apple here just about breaking out of this 497. If Apple can get now, Apple held up well on this whole push down in the last couple of weeks. So even if the market pulled in today, tomorrow, I think Apple has a chance of breaking out here because it's been really just holding here. And if Apple takes out 497, for a trade, you can take that breakout on a closing basis and start nibbling just below here. Your stops would be down here. A little bit of a wide stop, obviously, but the range is wide, so position size that accordingly. And lastly is the Qs, which is nice. As you can see, Nasdaq doing quite well at the highs here. I'm going to put a nice little horizontal trend line. So we're doing well here. Everything's kind of humming along. I just like to see how the market reacts when we get this resolution of this debt ceiling, and or at least kick that can down the road and push it back for 6 weeks. See what happens here. If we get a resolution, I'm thinking maybe we pop higher and then sell off. You cannot deny the fact that it's possible that we could sell the news. So that's why I wouldn't be too aggressive long. Definitely have some long exposure on your portfolio, but I wouldn't be. And if you are having some long exposure, again, we want to buy some strong stocks that are holding up well from the last couple of weeks and coming into some seasonal strength here. So keep an eye. Let's see what happens the next couple of days. There's going to be some good numbers coming out. We have some Empire numbers coming out today, and remember that debt ceiling is due on the 17th. So we should get some feedback from congressional leaders here any day on what's happening. So keep a close eye. Be safe out there. Use your stops, and we'll speak to you tomorrow. Take care, everybody.